technical difficulties. Please stand by.
The market is always having technical difficulties, but MoneyLife can help. Every Friday, we're talking technical analysis.
We've come for help and we're not leaving without it.
Are you confused by the technical jargon and terms?
This is what makes you confused! Don't you get it? This is confusing you right now, isn't it?
Our guests will talk about the techniques they use each day to analyze the market and tell you what they see now in some of the market's numbers and charts.
Please stand by. Technical difficulties are temporary.
They'll tell you about the trends they see and how you might react to them to plow through the market's technical difficulties.
Yeah, I'm pretty confused, all right.
So stay tuned and get ready to cut through the confusion with Chuck Jaffe talking technical analysis on MoneyLife.
Indeed I am, and I'm talking technical analysis with somebody who I really enjoy doing that with. Toni Turner is the president of TrendStar Group. Now, you may remember she's been on the show a few times, but the first time she was on the show, she was talking about her book, which is Invest to Win. And so you can take a look at the book. If you hear stuff that you like here, you can learn more about technical analysis, and you can do it all at her website, which is ToniTurner.com. Toni spelled with an I. Toni, welcome back to Money Life.
Thank you, Chuck. Good to be here.
So as we look at the market now, we're around all-time highs. We got the Russell reconstitution going on. We got lots of things happening. We're into that period where some people would say sell in May and go away. But that doesn't seem to be what you've been telling folks these days. You seem to have a pretty positive outlook right now, don't you?
Well, and I did, Chuck. Let's flip that a little bit there. I was a relatively happy camper, and I think the market was too up until 2 days ago. And, you know, there was a toss-up there as to whether our Fed chief would make nice in his press conference and would say, no worries, the punch bowl is going to stay out, or we're going to take it away. And he chose to, I think fairly and conscientiously, he chose to give us a timeline and tell us that actually by about mid-2014 or so that they were going to yank our allowance. And I liken this market to that, to a teenager who got an allowance that was maybe too hefty, and maybe he's out buying Mercedes and running around town, and his parents all of a sudden say, hey, just hold it. You don't need such a big allowance. You got to go get a job. So, you know, the market's annoyed. We're taking away her allowance, and she's not a happy camper.
Is that actually going to change how you invest now, this far in anticipation of Fed changing its policies, or does it just make you say, okay, I got to look at some places and say maybe I need to take my foot off the pedal?
I think that I myself would have not reacted this dramatically to having my allowance taken away, or at least the vehicle that I would not have reacted this dramatically, but certainly the market looks forward, as we know, 4 to 6 months. In this case, it appears to be looking forward even longer. But we had the China PMI, the flash PMI, coming out lower than expected. And China's PMI actually slipped to a 9-month low, and I think that added to it. I think rising jobless claims. We had good data. We had Philly Fed. That was better. Of course, home sales are doing well. There's always the good news and the bad news. But, Chuck, I don't know if you agree. I also think that for some people, yesterday and maybe this morning was the final straw. Hey, I made really good money in the market this year, and I'm not going to give it back.
How defensive do you get? When you're looking at technicals that are changing, are you getting all the way defensive? Let's go and leave the market completely, or are you going halfway? What are you thinking?
I'm halfway, and I have stops in on some core positions. And no, I'm going to say I'm more than halfway out, but I'm also looking for some opportunities here. I think that healthcare, when after we get through this bump in the road, I think healthcare for a long term in the future is going to be a place to be. I think the baby boomers are going to make it that way. I know I'm one of them. I know how they think. We'll do anything to stay mobile and to go forward in a healthy manner. I think healthcare is going to be huge, and in biotechnology, pharma's in ways that we can't even imagine right now, and that's going forth quickly.
Are you suggesting that people, as they look towards those kinds of hot buttons, tilt a portfolio a little bit that way, or that they put a big slug into some sort of a healthcare ETF or that kind of a mutual fund, or is it more still looking at individual issues and trying to find the right pieces out of that kind of a trend?
Well, one thing you can do with that, it's interesting you say that, because one thing you can do, for instance, one of the healthcare ETFs, the XLV, Select Sector Spider Healthcare ETF, I'm going to say once it starts up again, because I do believe that'll happen. What you can do is you can put longer term money into a sector ETF that is climbing in an uptrend, making higher highs and higher lows on a daily or weekly chart. And then you can, if you're so inclined to move in and out of stocks a little more than that, you can buy the Pfizers, you can buy the Mercks on an upswing, and then jump out if that upswing starts to consolidate. So you can use the ETF for a longer term core position. And then if you like to trade more than that, swing trade individual stocks.
You know, you've talked here about how the action that we've seen this week is going to make you basically pull back on stocks probably at least 50%. What is the trigger that would then make you say, okay, I'm ready to get back into the market? Or what would be the trigger that would make you say 50% wasn't enough, I got to take more off the table?
I want to see the S&P, and of course, in with that the Nasdaq and the Dow. I want to see the S&P make a definitive low on a daily chart, and we have support coming in at 1580, 1570, 1540, somewhere in there above the 200-day moving average. I want to see it make a low, then make a higher low on the chart, and then perhaps that's usually a little fake out move. Then I want to make sure that it has a foundation under it. At the same time, I want to see transportation stocks going up, and I want to see the volatility come down from the VIX.
So that's the conditions that's going to make Toni Turner feel like, hey, there's the next move. But right now, the move, a little bit to the negative. And that's the word from Toni Turner. Now, if you want more information on Toni and everything she does, including her book, Invest to Win, go to ToniTurner.com. Remember, Toni is the president of the TrendStar Group. Toni, it is always great chatting with you. Thanks so much for taking time out. I hope we get a chance to do this again soon.
Thanks, Chuck. I appreciate it.
There is much more to go on the June 21st edition of Money Life. Up next, it's the big interview. Stick around. This is Money Life. Let's live it together.